Pre-pandemic, there was a view from some quarters that immigration was driving up the price of housing and putting downward pressure on wages. But over the past 2 years, with the borders shut and net migration declining, the housing market has been booming and there's been little evidence of wages growth. So what's going to happen now that the immigration tap is starting to be turned on again, with skilled migrants and international students flowing through the border once more? I asked independent economist, Vice-Chancellor's Fellow at the University of Tasmania, Saul Eslake.
In 2019, Australia took in about 150,000 people on student visas. A significant number of those, of course, would have been Chinese students, and one great unknown is whether, when Australia becomes willing to let Chinese students in, the Chinese government is willing to let their students come to Australia, given the deterioration in the bilateral relationship between Australia and China since the onset of COVID. So we may not get as many students as the number the government is suggesting.
And that would be a big blow to the economy, wouldn't it? Because it's such a big export earner these days.
Well, absolutely. Prior to the onset of COVID, education was the third or fourth biggest export earner for the Australian economy after iron ore, coal and more recently natural gas. So that could be a significant blow to the Australian economy and particularly to the university sector, which is, along with tourism, amongst the hardest hit by COVID itself. So that's an area of significant uncertainty. The number that the government's talking about for people coming in on skilled work visas is roughly in line with what we were experiencing prior to the onset of COVID. The surprising thing perhaps is that the number of people coming in on temporary skilled visas was significantly higher than the number coming in under permanent skilled visa arrangements. But nonetheless, that will, if we're able to get those migrants to come to Australia, address some apparently serious shortages that employers have been encountering over the last year or so.
Yeah, there is extreme demand for workers in particular sectors, and yet we haven't seen much wages growth over the past couple of years. Is this influx going to force wages down further when you bring in so many more particularly skilled migrants?
Well, there are some areas where, on the basis of the most recent data from the ABS that was released last week, employers are willing to offer higher wages, in particular in the professional, scientific and technical services sector. The wages rose by 3.5% over the year to September, which is the highest for quite some time.
So is there a risk that they could be replaced by cheaper labour from overseas, those jobs?
Well, skilled workers do have choices as to where they go. So if people with skills that are in demand in Australia thought that an Australian employer would pay them less than an employer in, for example, the United States or the European Union, I doubt that the kind of numbers the government is talking about would significantly dampen wages in those areas. The greater risk would be if the government were to allow a significant increase in the number of unskilled people coming into Australia on one sort of visa or another. There is evidence to which the Governor of the Reserve Bank alluded in a speech earlier this year that the ability prior to the onset of COVID of employers to access unskilled workers from overseas on temporary visas was exerting some material downward influence on wages for Australian workers in those categories as well. So we're talking there about areas like agriculture, accommodation and food services, catering and cleaning and the like.
What about housing? The old thinking in some quarters pre-pandemic was that if you cut migration, there'd be less demand for homes, housing affordability as a result would improve. The pandemic seems to have disproved that theory pretty spectacularly. So what can we expect out of this? And assuming the tap continues to be turned on for the price of buying and renting a home?
I don't think the return of migrants in the numbers that the government is talking about will have a major impact, may not even have a minor impact on housing affordability. I think what happens to interest rates and the availability of credit will be a more important factor. And of course, it seems likely that interest rates will start rising at some point in the next 2 or 3 years. That is going to dampen the demand for housing at the same time that possibly an increase in the number of permanent migrants is going to be working in the other direction.
That's independent economist Saul Eslake speaking to us earlier.